Recording in progress.
Good afternoon, everyone. I want to welcome you all to the Tax Resolution Help Center. My name is May. I will be hosting today's session and introducing today's speaker. And I will also be coordinating the Q&A chat session at the end of this session. I also want to congratulate you all for taking steps to deal with your taxes. Taxes from all sources, including income tax, payroll tax, property tax, excise tax, and sales tax, represent a 35% to 60% reduction in your personal savings and wealth. As you probably know, those with 1% of the wealth in this country have experts to help them pay a small percent of tax. Our goal is to help you reduce how much you pay in tax by educating and informing you on ways to reduce past, present, and future tax expenses. We think you are entitled to live a happier, healthier life by keeping more of what you earn and getting the tax man off your back. Our goal is to provide you good information with the opportunity to ask questions that are important to you. The presentation itself will last about 20 minutes, plus 20 to 30 minutes for you to ask questions by chat. I will select the questions and present them to today's expert. If you wish, you can include your first name and your state. That would be great. Other than that information, your identity is not mentioned. The information you are receiving in this session is not specific tax advice. If you want specific tax advice for your situation, you are free to contact today's expert or any of our tax experts at Tax Resolution Help Center. As you know, these group sessions are included in your do it yourself membership fee of $20 per month. If you are not yet a member, please sign up today. We need your financial support. And to better understand what might be on your mind during the session, I might include some polling questions to ask you. I will then finish with a 5-minute wrap up. Also, a survey will be sent looking for your feedback. And finally, the session will be recorded. The topic for today's session is dealing with liens and levies, garnishments, and asset seizures. And the tax expert for today's session is Vincent Lloyd. Vincent has been a CPA for over 30 years and has represented individuals and businesses before the IRS to provide relief options to remove, reduce, and resolve their tax obligations. Certified public accountant licensed in the state of Minnesota and Illinois. He is accredited by the AICPA as certified in financial forensics and as a personal financial specialist. Vince is a QuickBooks certified pro advisor and provide tax planning and management to individuals and small businesses. With that said, introducing Vincent Lloyd.
Thanks for that warm welcome, May. And thanks for you for joining dealing with liens, levies, garnishments, and asset seizures. And I always preface when I start this presentation is this is the end of the road. This is not examinations. This is not tax prep. This is at the end when the IRS is trying to get their money. So there's some nuances in this process because a lot of opportunities have passed by. Okay. So you can take some of this information and use it as you're in the process of tax prep, audit, examination, all of that. But here, the assessments have been made, the determinations have been made, and now this is what has happened. And generally, this happens with clients when they are not actively involved with the IRS in trying to resolve their circumstance. So that's why I was just bringing that out of understanding IRS audits, the assessment process, the selection, the examination, appeals process. So you can have a broad view. A lot of times what happens is people just say, yo, this is just prep. That's all it is. And I'm not concerned about that. No, you really need to, because the issues will come up as you go along. And so, once you get to that particular point where now you're in collections, this is where now you're advising delinquent taxpayers about alternatives. All right, because sometimes what uh, clients want to do is to relitigate the beginning of the process. That's over. You can't do that. Now you have to come up with alternate ways of paying the debt that has been assessed and determined. And that's where you get these installment agreements, offers and compromise. Um, Last week, the issue came up with currently non-collectible. And I made some statements, which technically they are correct, but there's a nuance in it. And one of the things is that the IRS has determined you are bankrupt, okay? And the opportunity of collecting anything short of you winning the Powerball or the Mega Millions, all right, they have determined that this cannot be collected. There's no way someone who has assets, and here was the nuance, no one that has assets or income opportunities can get into currently non-collected status and try and waffle their way up to the statute of limitations. That's not going to happen. What happens is the closer you get to that statute, the IRS is just much more aggressive, especially if they have, these tools for them, liens, levies, garnishments, and stuff. They're going to be very aggressive because they're knowing they're coming up to that. If that's not your case, then okay, you may be able to waffle. And so that's why we got here the collection process: liens, levies, and seizures. And there's two types of appeals. You got collection appeals and examination appeals. All right. And the examination appeals is that, the process, you did your tax prep, you get some letter in the mail, and now the IRS you're in this process of examination. And then now they're going to come up with assessments and determinations, and you can appeal those. You're not in collections. All right. And this is what is the most favorable, not only to the client, but then also for me as the representative, because I have much more tools available to me in examination than I do in collection. Because once you get into collection, assessment determination has been made. You can't open that up. There are extraordinary circumstances, but generally that is not possible. So just a little background as far as liens. It's the government's legal claim against your property when you neglect or fail to pay a tax debt. And that wording is there for a reason, as opposed to unable to pay. This is neglect or fail. And that's what an IRS, and I always bring this up, an IRS agent told, is those who can't pay, those who can't pay and those who won't pay. And that's when they're very aggressive with those individuals who won't pay. All right. So the lien protects the government's interest in all your property. The IRS, what they do is they put the balance on their books. It's on your transcripts. It's going to have a code, transaction code for it, where they've assessed this liability. They're going to send you a bill that explains how much you owe. That's the notice and demand for payment. And again, if you neglect, fail, refuse to pay the debt in a timely fashion, then you're going to get a notice of federal tax lien. And then this is when the IRS starts getting more aggressive. But again, lien is just a legal claim. Now we got a levy, and a levy is a legal seizure. All right, you've been put on notice as far as that is concerned, and now the IRS is actively trying to collect what has been assessed and what determinations have been made of your property. Okay, so as we said earlier, the lien is just a claim, but the levy actually allows the IRS to seize your property, which means to take it. They're not going to ask you, they're just going to take it. So this lien comes when, as we said, assessment. And always remember, I bring you for assessment, determination. These are the things that you have to realize with the IRS, this is part of their process and this is a part of their language. And so they file a public document, the notice of federal tax lien, to alert creditors that the government has a legal right to your property and you have the right to appeal if the IRS advises you of the intent to file a notice of federal tax lien. And that's where it actually suspends any collection activity when you appeal. Suspends it, it stops it. But the IRS knows, and I always tell people, the IRS is smart, they're sharp, they've been around. And once you're involved with this, you tell people this is not my first rodeo, and it's not the IRS's first rodeo either. They know, and they know the steps that people take, whether they're trying to pay or can't pay, as opposed to just paying and walking away. And so that's why the IRS is smart. They're sharp. They know how to deal with this. gone and liquidated. The only time that I've ever seen that there was an issue with this is if the equity that one has in the property is less, it's not to the IRS's benefit. So if you got 10% equity in a vehicle, let's say, the IRS is just not going to seize it, because if they do seize it and convert it, all right, and get their money, all right, they're going to have to be in the process of remitting the other money back to whatever other lien holder has that property, and they don't want to do it. They want to be able to take it, convert it, all the money comes up to them. But the thing about asset levy, it's a one-time effect. And then also, let me go back, even with a bank levy, it's a one-time situation. So if you win the lottery today and this is the 20th day, you wait a few days and you can have your lottery winnings deposited in the account, and the IRS cannot get at it. But they will try other things to go and get those monies. So again, seizures, collection notices, unpaid tax, begins with those notices. And then as this thing is bringing out, it'll be assigned either to the automated collection system, and that's where we call the desk audit, and you get the letter in the mail. And then you got field collections or the collection queue, which is they'll just send these automatic notices to you. And then they still have an opportunity here to get an installment agreement, offering compromise, or some other alternative. And let me just say one last thing on offering compromise. You pretty much have to have no income coming in to have a viable offering compromise. All the ones that I was able to secure, people were bankrupt, they were elderly, someone had a business, it failed, and a lot of it with health and things like that. And so you can get it there, and you go through that process of peeling this to go and get that. So here's the thing of summary, and like I said, we've been over these, the liens, the levies, the garnishments, the asset seizures. This is all a part of the collections. There are no examination issues, and when you are appealing, all appeals, it's about the IRS process. Let me say this again. It's about the IRS process. Did the IRS follow its process when it came about to issue these liens, levies, garnishments, and asset seizures? It's not the IRS did not take into account these deductions I had. Too late. The assessments have been made, determinations have been made. It's over. Now it's to the point of let's have some collection alternative. Now, it's not absolute. If an issue was brought up subsequently and the IRS did not address it correctly or timely, you can bring that up, but no new issue. All right, because what happens is all the issues that you bring up, that IRS agent, when they're having a conversation with me, they've got a response on all of it. And the one response you want to hear is, well, I don't have anything on there. That's only happened to me once. All right. So as representing people, I got to make sure I've got my documentation in order, because in that issue, the agent skipped over, and I go, well, wait a minute, this issue was brought up. And, do you have it on your documents? Have you skipped over? And they said, well, I don't have anything on it. Okay. So that's why representation is always helpful as far as that is concerned. All right. So I appreciate it. And one of the things I want to go over is the issues that we have had in previous presentations. And I was talking about one earlier about that currently non-collectible. The statute of limitation can be told based on fraud and some other things of what people are doing. But the natural 10-year period is going to move on. It will only be a benefit if it's a currently non-collectible. And once again, pretty much the taxpayer is bankrupt, or it's not worth it to the IRS. So I give you an example. Somebody owes the IRS $500,000 and they're doing DoorDash. The IRS is not. Or they got a part-time job at Walmart. The IRS is not going to do anything. All right. But they win the lottery, then the IRS is going to come back and they're going to be aggressive as far as that is concerned. The other thing that was brought up too was pensions. And the pensions are what you get, they can take, so they can actually attach and put the levy on the account. But if you don't take anything out, all right, the IRS doesn't get it. And I think they did have a situation where someone died and the heirs, they received the money less. And that was a little complicated because, and this is another thing about these retirement accounts of how you title it. So spouses have rights that other beneficiaries do not have. So, but just wanted to make sure that there's some further clarification on those two areas, the retirement accounts and currently not collectible. It's a lot involved into it, and I sort of kind of summarized them the last few times. It wasn't inaccurate, but it was just, there's a lot of nuances as far as that is concerned. So that's the end of my presentation. If there's some questions, we'll take them. May will do
Yeah,
that.
definitely. Thank you for your time and presentation, Vincent. We do have a question here from one of our attendees in Zoom. This is from Jacob, and his question is: what do I need to do if I receive a final notice from IRS? Should I call them immediately to prevent getting my property?
All right. So once again, it's going to be a process as far as that is concerned. The letter that you receive, it should have instructions in there. Whether you agree, disagree, you can appeal. It tells you all your rights. And so fill that out, because calling them is not, at this particular point in time, it's not advisable. All right, because at this particular point in time, everything is done in writing. So they sent you something in writing, they ask for a response. If it's in writing, now sometimes what happens, people get notices and they give you a date. They say, hey, 30 days, 60 days, 20 days, 10 days from this notice. You have to always go to the post office and get a receipt that I mailed it to the IRS, because that's the mailbox rule. It's when I mail it, not when they receive it. And I've got that documentation. There's a number of court cases where this issue comes up. So whatever that letter is telling you, and if it's giving you an opportunity to appeal, respond, then do it that particular way. I always do that. Even if I'm dealing with a revenue agent, I will sit up. If I have a response, let's say I'm going to talk to them on the phone, they have a fax number, I put it all in there and I'll send it to them. Because sometimes the IRS agent, they will send you faxes with requests for information that they want, and then you just make sure. But if I have a question of anything, I'll type it up and sit up and fax it to them, and just make sure I got a receipt. Because yeah, I've had times where I've sent stuff to them and they said, oh, I didn't get it. And I know I got it because I got a receipt as far as that is concerned. But I hope that answers your question in the sense of, respond to them timely, and also have a strategy as to what are you going to do when you're going to call. All right, because the time of waffling, it's just like, well, I'm thinking, no. You responding, you say, hey, here's an offer in compromise. I want an installment agreement. I'm going to appeal this. You have to have certainty in what you're going to do. trying to discuss, hey, can we talk about it's beyond that because the IRS will listen to you. They go, oh, okay, okay, that's wonderful. All the while they're filling out the paperwork, sending liens and levies out. So because you've been put on notice for that, and unless you have an adequate response, that's not going to stop.
Mm, I see. Thank you for that answer, Vincent. So this is, I think, the follow-up question for that is that this is applicable even though that it is already a final notice. I guess the third notice from the IRS. Mm,
Because
okay.
they're always going to have a response. And the situation, and this is what I was just saying, the IRS is very meticulous because that's where like appeals come in. Did they follow? Okay, the Internal Revenue Management, did they do what their policies and procedures state? So what people tend to think that they can upset the apple cart on that. And the IRS knows. That's what I'm saying. You can call them, hey, I'm gonna call you back tomorrow. I'm gonna have this information. That is not gonna stop them. Okay. If they give you 10 days to respond, if they give you 15 days to respond, all right, they've got to have some response. Just calling them up and trying to stop what they're doing, it is not. All right, they've got it. They're punching it in the system because a lot of their stuff, especially when you receive these final notices in the mail, they punch that into the system. All right, so if you timely with them and you're talking to them, um, and I'm talking to an IRS agent, I says, okay, what correspondence do you have going out towards my client? And they can look in the system and say, oh, there's a letter going, it hasn't been finalized. It's going to go out March 30th, or this letter is going to go out in 2 weeks once it's finalized. So they know when these things are going to come out. So that's what I'm saying. Having a conversation with them is not going to upset that because it's just going to be automatic as far as what they put in the system. So that's why you need to have a response, and I always say have a representative because you can mail it, I fax it, and then when I call the Internal Revenue Agent, I'm asking him or her, have you received it? And if they haven't received it, say, hey, well, I'm sending you another copy. I mailed it, and then I'll have a receipt of how I mailed it, and then I'm sitting there waiting for them to get the fax as far as that is concerned. Because like I said, that's how they get people. We didn't receive it. I'm telling you, Iris does that to me all the time. Oh, we didn't receive it. And then I have to fax them, oh, well, I didn't get it, but yeah, you've got proof here that you sent it to us. Yeah, I do. All right. So make sure as far as their process is concerned, because like I said, their stuff is automated. It's not like, oh, I got to send this out tomorrow. They punch it in the system and the system kicks out.
Okay, that's great to know. Thank you, Vincent. Now we have another question. This is from our live viewers in Facebook. And the question is, what should a taxpayer do if they need a federal lien release, certificate of discharge, or have another federal tax lien issue?
Yeah, what happens as far as that is concerned, um, to get that, you're going to have to come up with some payment plan. All right. Something that has accepted by the IRS. All right. Offering compromise, a payment plan, something. All right. They're not going to release it. You saying, oh, I've got some hardship here. That is not going to happen. Okay. You've got to have something. And like I said, I've had wage garnishments released the same day. Well, I get up early, I'm talking to them, they fax it to me, I get it over to the taxpayer, they're rushing to their payroll department because payroll goes in the night and they tell me, hey, if you get it in by close of business Wednesday, it won't go through. So that's it. Or hey, your offering compromise has been approved, effective as far as this is concerned? Can I get the release as far as that is concerned? And sometimes and it all depends on the IRS agent of how quickly that will happen. That's why I always try and be very cordial and respectful to them. I've seen people, I've been in the IRS offices and I can hear people screaming in another room. I just don't do that. That's just not me. All right. I just tell them this is a person, and I always preface myself is, hey, John has been a very faithful, diligent taxpayer for 25 years. He came upon a physical or financial hardship. That's how he got in this situation. He wants to resolve this as quickly as he can, but here's the circumstances and here's the problems. He's just trying to find a way that is conducive to resolve this. And they respond to it. Okay. They won't give me everything. I'll ask for the moon and they'll go, okay, usually I get maybe 20, 25% of what I ask for. Because, you try and get penalties reduced, interest reduced. They've got all kinds of little calculations that they do. Certain interests can be reduced or eliminated and others can't. But first time abatement, I use all the little things that are provided to the IRS to be able to make it better as far as the taxpayer is concerned. But specifically on this issue, you're going to have to come up with some resolution that's on the books with the IRS for them to release anything.
All right, thank you for that very clear answer and example, Vincent. We do have another question here. This is also complicated. Not for you, maybe for me. The question is, how do I stop wage garnishment?
Yeah, and that's one of the things that I've said this before. All right. You come up, the quickest way is to come up with a payment plan. All right. You negotiate a payment plan with the IRS. They will give you a release and you can take that to your employer. Short of that, all right, there is just no way that you're going to get that release. Okay. It can be adjusted. I've had people that have had hardships, and I'm talking about uh, physical or financial. Hey, um, I'm bankrupt. This is happening. They're foreclosing on my home. Some stuff. Is there a way that it could be? You throw yourself on the mercy of the IRS. Can this be adjusted? They won't eliminate it, but they can adjust it. And they'll, okay, we're going to go on and do this. But it's always helpful if you can do it in conjunction with a payment plan, because a payment plan, you just say at this particular point in time, all I can pay is $100 a month. But in 6 months, when I get myself back, can I come back, revisit this, and bump this up? So, but that's the thing with the IRS. Like I said, they're very, as I was saying at the beginning of this, can't pay or won't pay. And so I always try and establish this is the person that can't pay, not a person that won't pay, that they've got. And I remember one guy had a course many years ago. He wanted to get out of the IRS, and he owed like 500,000. And so this guy, he's an attorney out in New Jersey. He asked him. He said, "How much money you got in the bank?" He said, $2 million. He said, "Pay it," and he hung up on him. That's a person that won't pay. He's got the means and stuff. All right, I'm trying to find a way to get around this. And as I say, the IRS is going, as far as they're concerned, they think we're going to last forever. So we'll take big chunks, little chunks, crumbs. We'll take it. All right. So that's what they want, to be able to go on and remove that. And in my work, I have never had it released on the good graces of just saying, having my gum slapped. I've never had it. It's always some type of payment situation to be able to go on and get that removed.
Okay, thank you, Vincent. So basically, it concludes that you should establish to the IRS that you are willing to pay, not running away. All right. Well, thank you for that. So, I have a just to close the wage issue. How much actually? How much or how many percent the IRS can get? The maximum they can get in your wage.
Right. So that's all determined. And this is where the problem comes in. They initially go with a standard, all right? And generally, in that particular point in time, they know more about you than you know about yourself. Because that revenue agent officer, they've done background. They know the value of a house, how many vehicles you have, how many children you have. They know all your bank accounts. They didn't went back 20 years. So they'll know everything. So when they send it over, they got a pretty good idea. That doesn't mean it's going to be absolute or 100% correct, but they really know. If there's some other things, it's like my husband or spouse is having chemotherapy. I have my elderly parents, who are on dialysis, and I need this. They are generally responsive to health, physical, and financial things because they don't want to, um, and I'm not being facetious when I say this, they don't want to drive people to suicide. All right. They want to be accommodative as far as it's concerned because they know, especially when you get in these types of situations, it's very stressful. So I try and use that, because I had some situations with taxpayers with COVID, all right, and multiple bouts of COVID, all right, and basically the people deteriorated and the issue came down, they weren't responsive. And hey, I'm telling the IRS, this person is debilitated. This is what they looked like before, 250 pounds, and now, they're 90 pounds. All right, this is really taking a toll as far as them physically, and now they're trying to deal with this IRS. So then they're not going to offer anything. It's just like, what do you propose? And I always sit up and say, this is what I think is fair based on the circumstances that this person is in. And they can even, and they never go, yeah, I'll accept that. They go, well, I'm going to take 10% off of that because they
Mhm.
know uh, that that you're going to fudge. Well, they always know I get pretty much the same people. And they know I'm going to fudge. So,
Mhm. Okay. Well, thank you so much for that answer, which is perfect. For our viewers, definitely, at least they are aware right now what are the things that they need to do and no don't need to do when it comes to dealing with IRS. Anything else that you want to add before? Because as I checked, that was the last question that we have right now for this session.
well, I always end it earlier the better. The earlier you can get a client into this process, there's more tools. The tools available to you are much greater and lesser for the IRS. Once you get the collections, that changes. It reverses. All right. All the tools are with the IRS, and it becomes very limited as a representative for a taxpayer because by avoiding, ducking, dodging the IRS, that has evaporated. And it makes it very difficult. And it's very upsetting when you have a taxpayer come to me and say, help. And the only thing I can say is, like I was saying, that the tax attorney in New Jersey, pay. That's it. All right. All the things that were available to me because in your examinations, we can look at that. You have all your deductions. Is this income taxable? See, all of that is out the door that we can draw. I had a restaurant, um, and he had, I think it was 9 restaurants. And this audit and everything with it, he ended up having to pay. But the audit was almost 5 years. Okay, getting information and doing this. In some ways it was good because they opened up. They were doing like the last 2 or 3 years. Well, now we're gonna open up, 7 years and doing things like this. But he knew he had to pay, but we made sure that what he paid is what he owed. Okay. So that's what you got at the beginning. At the end, you don't have that. All right. The IRS says, here's the bill, pay. All
Mm.
right. This is not an examination appeal. This is, you're in collection. And so now you can challenge the IRS. Did they follow their policies and procedures? But you're not going to add any issues as far as that's concerned. So that's why I say the earlier, the faster, and then also one other thing, and I just thought about this. For payment plan, any payment plan, offering compromise, anything, the taxpayer must be current, must be current in their filing obligations. So if they're going to file an offering compromise, all right, make sure all of those tax returns are done. Okay. And that's one of the things that and sometimes they don't listen, taxpayers. I tell them, you need to give me I got somebody over here doing the tax return. Once it's completed, give me a copy. Do not let that person e-file a file. And of course they do, because I'm saying now if you give it to me, I can get it over to the agent and they can punch it in. All right. If you go through the system, that could be 4, 8, 12 weeks, because that's what happens. You call up the IRS. Oh, I filed last week. They call up, well, we have no record in our system that return. It has to go through that whole processing. So once you tell me, oh, I didn't e-file it, even if I got a copy and give it to the IRS agent, they're gonna say, well, I gotta wait. I'll try and work off of this, but they have to know that it's been filed. So that's why I just said, and I always do this, and I know I'm gonna cut this short. You and your client have to be on the same page. And I always say this: do not represent yourself in front of the IRS. Do not, because it's fish in a barrel, because they know you don't know all the intricacies, they know you don't know all the details, and so when you come in, they're going to be pounding pay, 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 pay. Fill out this payment plan, do this and do that. All right, not really, because they don't represent you; they represent the IRS, and so they're going to do what's in the best interest of the IRS. I, as your representative, do what's in the best interest.
Mm. Okay. That's actually great to know. Thank you so much, Vincent. That's a good advice for everyone that is listening to us and watching our live right now. And also, I want to thank you also, Vincent, for devoting your time with this session, a weekly session, and also sharing your expertise and providing us your actual examples that will really help us um, know what needs to be done so that this will be fixed immediately. All right. Well, I hope you do have a great day today. Thank you again. And good afternoon. Bye bye. All right. So I want to also thank everyone for attending our session. Our commitment is to help you reduce your taxes and increase your wealth. We do this with the try tax method of DIY, do it yourself, DIT, do it together, and DIA, do it all. Three methods, one solution to reduce your stress from no IRS or tax debt and a happier, healthier life. And if you are not yet a member, please join for less than $20 per month. We need your support to continue to offer more of these sessions. And since it is now tax season, we have many sessions to help you do a better job of doing your taxes yourself. And of course, if you want help, we have a team of experts who can do your tax return for you. Please also check our website at taxresolutionhelpcenter.com. And please join as a member today for only $19.95 per month. Again, thank you all for attending today's session. I hope to see you again in our next session.